Hi guys, what's up? Boyo Dips, and today we're going to be breaking down EURNZD, that's the euro to the New Zealand dollar. We're going to be breaking down these two trades that I took, I think last week and yesterday. Today is the 21st of November, so that's Tuesday. So without wasting much time, let's pull up another broker. I don't like using the broker that I'm trading with to do these videos because I have to wipe them out, and that affects my track record. Okay, let's use forex.com. So now let's take this chart back a bit to where we took those two trades off. I think we took those trades from this level, and I think this level. So if we just rewind that a bit to yeah, that'll be fine. I'm sure by now you already know how the flow of my videos go, and I can guarantee you that if you've been watching my videos by now, you'd have started trading smart money concept at least 50%. So without wasting much time, I mean, give me the honors of telling me what I should do now. You are correct. Market structure. So the first thing we want to look at is what our market structure to identify the bias of the market, and then we see that there's this low puts in this there's this high that puts in this low, right? That is a break of structure. But from this level to this level right here, you can see that there's what now? A change of character, right? So we'll have a change of character. It simply means that the character has changed from a bearish momentum to a bullish momentum, as in the case of bullish. Why? A change of character can also be happening from a bullish to a bearish. Now you see that this low now puts in this high, this puts in this high. So what then we have? We now have a structure break, because now the structure has already changed to a bullish structure, and then we now have a break of the previous bullish structure, right? Now this now is our new low, and this is our new higher high. So we have a higher low and higher high. So our expectational order flow is for price to actually react off of this area, somewhere around this price leg, right? And now take us to take out this high. So that's our expectational order flow. But if we push the market forward and see what happened, what do we see? We see that price actually broke this level, so which invalidated this order block. So what do we have again? You have 2 seconds. Where is this? Good, a change of character. So now we'll change character again to the downside, meaning that not just our trend change, our expectations have changed as well. So we'll now be looking to find out the leg or the price within this area that price can actually come back to filling liquidities and all that, and then push further to the downside. Wow, just so you know, the sun today is, I don't know what do you call it in the morning, sunset? No, the one that when the sunrise, yeah. It's very nice. So I think I'll be talking more chilled now. All right guys, so sorry for debating. The sun entered my eye. Now what are we expecting now? We're expecting for price actually take out to actually come back within this price leg. That's this range structure. Look for areas of liquidity it wants to target, and then push to the downside. Now this is a B setup, right? I consider this trade that I took around here a B setup, and I'll explain why. So in the meantime, let's keep the analysis rolling. So already I expect that price is going to reverse, because I can already see that there's this big level here that price may need to come at least mitigate a bit. I see these areas too. So my eyes is already getting to that area to say, oh, okay, even though I know price can also push down to put in new lows, it will be looking to reverse at any point in time. So what I want to be doing is to be looking at it, areas like this, to be checking what is really happening within the market, that time frame, right? And for me, I can see this area here. This is demand zone that caused this change of character, and I can see that this was the order block that this demand zone reacted off. So what I want to do is start looking for those areas, even though they've already been taken or tested. They will be likely weak points. I call them weak points, not really strong points. Likely weak points that price may actually just still respect. And that's what happened right here in this area. So if we push a smaller time frame, we can see that price made this big bullish candle, right, and left this fair value gap hanging right here. So first and foremost, this is my first indication that price is now looking to, like, the sell is getting weak, right, and the buyers are like trying to come and push the market upwards to grab liquidity at the top. And then you see that what happens on the 15-minute time frame. See, price has made this high and it's putting in a low as well. I think I entered it on a 5-minute time frame. Good. So on 5 minutes, so it's putting high, higher low, higher high, higher low, higher high, higher low, higher high. And what do we have here? If you look closely, you can see that we have what, another break of structure. And then, but this break of structure is different because why? The you can see that there's this nice fair value gap that is left, right? Very beautiful one. So you want to mark out the 50% of this area all to the downside. Normally you can just target here, but most likely when I'm entering, if you have noticed my video, you see that if I'm entering a smaller time frame, if I see markets even doing this already, sometimes I'm not even wait for it to give me that structural change that's coming back. I'll be just going, because many times than not, let's say of 5 out of 10 times it will not come back there. Immediately it says it's going like this. We just do something like this and take off. So but when you see market giving you this is why I consider this a B setup, because it's not my A setups, but this is a B setup, and 2 reasons. One, I'm trading against my expectational order flow, right? Then secondly, it gave me this perfect confluence. So the confluence was perfect, and then I said, oh wow, I can actually risk it since I may not be risking so much money at least. And what happened, my entry, even though my entry was on this dot, I think my broker didn't take me in. But you have to know me now. I had to jump in like that because I can't miss that trade. And don't worry, that's not FOMO. That's the fact that I know that trade I couldn't just miss it. So yeah. So anyways, if you look, you'll see that we actually tapped in on this other block right here, but I wasn't tapped in for 2 reasons or whatnot. I think the spread from my broker, and because of that, you can actually put your stop loss just underneath this this right here. That'll be your initial stop loss until we break the structure. So on the, where is going to be our target? Now remember I told you that we saw this level right here, right? So pricing will be oftentimes are not come back here though. So if you see this, you see that there's another block like this on a 2-hour time frame. So it's more likely that if we were to draw a feed now on this other block alone, we can target this 50% area as our TP level, right? So that in case price wants to still come here and feel it, that's its prerogative. But just to be safe, since this is secondary setup, this is not my primary setup, or I'll call it my B setup. So let's see how that trade went. All right, guys. So we're tapped into that trade, and you see that price just took us up all the way, brought us back down. We're still having a lot of liquidity building up around those areas. And what happened? We tapped in. That was our TP level. Now, what comes to your mind here? Change of character. It's in our supply zone that caused a change of character. So obviously we'll be anticipating what? We'll be anticipating a sell. But before that, let me pull out the trade on the EURNZD from my Discord. So now you have my Discord here. This was the EURNZD, and you can see my entry. It went up. It didn't take me in here, right? So I got upset when I saw this consolidation happening and it tapped a bit here, and I saw it kept going up. I just took an entry here, and I took this trade all the way to the top and smashed my TP. So yeah, so now we're at this other block, right? And the next thing we want to do is to go maybe on a higher time frame. Let's actually analyze this and see how I took this trade. So it's on a higher time frame. It's like 30 minutes, and what I'm looking for is the kind of reaction that's it's very positive on that it's in that area, right? Let me check. I think I sent this to the deep straight idea EURNZD. Yeah, this was the trade right here. Yeah, so see that it's on the 50%. This will be on a smaller time frame, obviously. Yeah, 50 minutes. And what can we see? And this was our entry right here. So first dive and second dive. So this was because now this okay, now it's two things, right? Now this is our 50% line, right? So here is a discounted. We are selling. Oh, I've forgotten all these things. Sorry guys, I'm not eating this morning. Here's the discounted zone, right? Here's a we buy at a premium. Here's a discount. So we are selling at, so we're looking to sell at it. We're looking to sell at a premium. Sorry. This is a premium zone, right? And this is a discounted zone. So we are looking to sell at a premium. Now, price may not always in every instance come and tap into this area, like what I tried to explain to you right here, right? So the only thing that we can do is to observe and see how price reacts on its way there. And now, for instance, this is the first confluence for that reasoning. Why? Because see that when price came here, it puts in this week, Now, although that week is nice, it can also be a form of inducement. You get, it can also be a form of inducement to actually take a trade from there. And then you may take this trade and then it takes you here, even if it keeps on going down, but then you've lost one trade, which is not bad anyways if you're using smart money. Then we want to keep searching and see for possibly an entry around this leg, because now what do we have? We have a break or a change of character from this internal range structure from being bullish to now being bearish. So we have an internal range of change of structure, change of character. Guys, I'm hungry. Sorry. I'm really sorry. I'm really sorry. I had a very hectic day yesterday, so I don't know how to make this video. All right, guys. So back to it. So if we have a internal change of character, means we're going to be looking to take our trade off of, and also internal supply zone, right? That caused that change of character. And from here, what we can see is this whole area, right? Ideally, this one. But you want to trail it all the way to the top, right? Or ideally this one right here. So if market push to that level, we want to look for how to get in without wasting time. Okay, so that's it. Now remember I said ideally this one. If you look now, you see that we have a sweep on liquidity here, but normally, like I told you, our stop loss will be here. But even if your stop loss was not here, you will not just jump in on the entry too. You look for a small confluence that gives you a green light, so to speak. And that's it. So now we're tapped into this our order block right here. You see price now broke the structure, and what came back to retest it on all these areas. And for me, that's my entry. That's my entry. That's right here. That is it right here. That was my entry. Because now our expectation order flow one aligns with what's happening. I have a change of character, so expectation is for price to come and raid this low, right? That's one. Now our internal range structure is now matching with our external range point or swing points. That's two. And then we have further confluences like this beautiful setup right here to actually look to go short in the market, right? So that's three. So right here would have been shorting from this point here. Our stop loss will just be here, since now we are going down, and your TP1 should be this low right here. Now let me always give you an example. In my videos or in my pictures, you see that my TP, I always drag them to my mostly 4 hours order, 4 hour order blocks, right? or just 4 hour swing points. Now I do that because that's my expectation order flow. It's not my TP in actual fact, right? I always TP on the lows of maybe my 15-minute candle or the time frame in which I'm entering the market. This is a clear example. This is supposed to be my TP1, which is even going to still give me a 1:6, right? But because of my expectational order flow, which is here, and that's why I always take my TP all the way down here. So before price even gets here, just know that I've closed like 60% of my trade, maybe somewhere around here, and I'll let the remaining run come and hit me on break even, right? So let's go back to maybe let's see how that trade went. Yeah, so you see our tapped in, and you can see that price just start pulling all the way down. Now what do we have? If you notice here, for those who like to take more trades, we have another internal break of structure now. Now don't forget, internal swing point, internal range structure is now matching with external range structure. So you will have that. You have to look for like possible supply zones that caused that move, and you can maybe look to enter again. This is another entry. So if you are shorting it from here again, your stop loss will be here. Your TP will be this one right here. So that's a first TP right there. And yeah, this is real time now. Yeah guys, so that's about that for EURNZD, and if you did like the video, please push the like button and subscribe to my channel. Also, if you're interested in learning smart money concept, don't fail to send me a message on Instagram, and let's see how we can walk you through the process. And in the meantime guys, take it easy and stay blessed. Bye.